Okay, week commencing 4th of August. The last week, you had this large move, very typical week where it starts off mainly focusing. First, it was just consolidating, then it breaks to the downside, and then runs up to look at make it look like that's the real move, and then Thursday, key high of the week, which is classic AMD week, and then obviously closes the week by sinking into discount, creating market structure shifts. This order block gets violated. This one does as well. Shift in market structure here. Closes in the discount part of this old new week opening gap. So yeah, we have a shift in market structure officially now, meaning we would basically want to see something if we can get here in this busy weekly fair value gap. That's so far the focus for the week. In terms of the news, today nothing. ISM on Tuesday, 10 a.m. Nothing on Wednesday, 8:30 p.m. news as well. Friday, nothing. Okay, so again, not really a lot of volatile news. It makes sense because we already had this. So again, I wouldn't look for large ranges this week. It might simply just be about going into the taking out the on-side shorts here that were profitable, attacking them mainly, and then seeing if we can get into this BISI here, this discount BISI on the daily and the weekly. So yeah, so long as the bodies are closing below this on the daily, I'm gonna continue looking towards a move that takes us into this discount, BISI, and the weekly as well as the daily. But should we violate that, then obviously that's something I would have to wait and see more information. But obviously you can still have large wicks. You might have like a wick, for example, that would seek to close the SIBI, but then it still closes inside on the daily or even on the 4 hour. Below this mean, then that would obviously signal that that was just a turtle to buy side run, and then we're actually just gonna come down. So something to be aware of. Um, this is the key low that I'd be looking at for weekly. Would be the key weekly low. Something to look for in terms of withdrawal and liquidity. And then because it's not much news, we'll just have to wait and see. Now, obviously, this is just higher time frame. The good thing with my technique is I don't need to be right necessarily on the higher time frame to any given degree. Although I would like to, but it's fine. I don't need that to be profitable. My main goal is to see where the drawn liquidities are, what have we already taken from the market, what kind of liquidity is already set, and what's the counterparty liquidity that's feeling safe that is next on the menu, and then using my handcrafted formula where I would basically 2022 model, but just more refined, my own version, my own personal model, where I would look for a buy side raid that opposes the counterparty that takes the upsets the counterparty, then shifts in my favor. So if I'm looking for a short, it will shift lower in this case, and then once these two qualifiers are in place because they qualify a trade, then to make that higher probability trade, I would then bring in the X factor. Is it a high resistance or low resistance? If it's a high resistance, then of course I'm going to the internal range premium run. So the most premium CB or PD array in that price range, I would basically place the pending order on that. That would get me a really good tight stop loss and a really, really high probability setup to at least hit a partial. If it's obviously low resistance, then I'll use other techniques like a lower proximity hit. I can confirm that just simply by looking at where the bodies are closing on the 1 and 5 minutes, and then I can still participate if I miss it. If it's too fast, I can still use the second charge to go in and get that. So basically, there's no way I can miss anything. I'm trying to say, if I miss something, that means it's just low probability, and I'm just gonna elect to wait for a better condition where I can more easily gain access to that entry and setup. And the final cherry on top is time. I'm gonna try to bring in time as well, and as well as the critical range. The critical range is basically that the engine, I would say, that's what will tell you if you're too early to the party. A rare, but it can also tell you if you're late to the party. It doesn't normally happen to me. And the final thing is, it will tell you if you're offside. If your bias is wrong, basically, then that critical range will tell you, because the critical range that you think the high one shouldn't get taken out in a sell bear market will get taken out. Then that's how you would know. In most cases, you are wrong. Either that, or either you're too early to the party, and that shift isn't actually shift. It's a turtle soup on buy side. Now it's going to actually go down finally. So again, the critical range is really important. It's the engine. So a lot of good things I've learned recently. So yeah, very simple. Just again, less is more. Be patient. Demand the best conditions, A plus, and you should be just fine, inshallah.